Welcome, friends. I welcome you to the 22nd virtual CP meeting of Boyoli Central CP Study Circle. As the BCAC is known for providing the lectures on new era and new topics every time. So this time we have come with the new topic of tax technology evolving landscape. And on this, we are having with us the eminent speaker, CA Divyesh Lapsiwala with us. He is from EY. Basically, you know that our government is rolling out various services on technology platforms and also using this big data to detect tax evasions. So now this traditional practice area is now going to become redundant in near future, and hence it's now need of the hour that we should, all the practitioners should adopt to the new technology. And so for this development and for understanding that this concept, we are having with us Divyesh Lapsiwala ji. So now I request Deepen to first play the motto, and I request all the to rise for the motto.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यपि कश्चन एतद्द्वैता
Thank you, Deepen. Now I request CS Shreyans Dedia to give the brief about the speaker of the session.
Thank you, Javarsa Bhai. It is my privilege to introduce Divyesh Bhai. CA Divyesh Lapsiwala is a partner and indirect tax with the indirect tax practice and leads the Mumbai Technology, Media and Telecom and FS team. He has more than 21 years of experience in advising clients on various indirect tax legislations. Divyesh has assisted clients across sectors, including financial services, media and entertainment, logistics, information technology, retail, infrastructure, manufacturing, and telecom. He has extensive experience in handling large, complex projects relating to restructuring, transformation, technology, implementation, and optimization. He has led several advocacy projects to work with industry and regulators to make tax policy more implementable. He also has experience in handling tax controversy matters, including investigations and court disputes. He supports some of the key EY tax technology solutions and drives and works with clients to curate their technology roadmaps. He's a regular speaker at the Indirect tax conferences and has made several editorial contributions on the subject. With this, I request everyone to please welcome CA Divyesh Bhai with a huge round of applause, and request Divyesh Bhai to accept our e-memento as a small token of gratitude.
Thank you so much for this. Thank you very much.
And BCAC will contribute ₹500 to CABF on his behalf. Over to you, Divyesh Bhai. You can commence the session.
Thank you very much. There is a comment in the chat that it is not audible. I'm just.
No, you're perfectly audible.
Okay. Okay. Thank you. Thank you. So, thank you. It's a pleasure to be here. Interestingly, I got the first opportunity to speak on a platform in Borivali Study Circle many years ago. I've been associated with this study circle now for more than 15 years. And I used to be actively participating in the past. I hope to regain that in the future as well. So thank you so much for inviting me here. Today, the idea of the session is to talk about how tax technology is emerging. What are the different attributes of that emergence? What is really happening in the global landscape and how it is all connected to India. And it's very important for us to know because very interestingly, as you will realize, there are many countries who are aligning themselves to the philosophy that India has adopted for digital tax administration. And there is an array of countries who are introducing changes very similar to what India has done on GST. So we will talk a little bit about that. And then if that has been the strategy of the government, we spend some time on understanding how taxpayers are responding to this change and what is the strategic change, if at all, that taxpayers are looking for in relation to the advancement of digital tax administration. And for the benefit, digital tax administration means, as Vasa Sahib just mentioned, is about how government is now wanting to understand, analyze, and regulate taxpayers, in addition to the technical points, by using big data, by using analytics, by trying to identify through machine and machine learning, what is the area that they need to audit, review, who are the people they need to examine more closely, and which are the transactions which are suspected to be something that need to be scrutinized. So how are companies reacting and how are companies preparing themselves for this? Which will in a way set the stage if you understand both the aspects, which is what is changing and what is digital tax administration. Second is how are companies reacting to digital tax administration. It gives the chartered accountant firms an opportunity to understand where is their space, what can they do, right? And what is it that is the long-term opportunity in this space. At the start, I would say that if you are a niche firm who are into specialization on technical matters, or if you are specializing in litigation matters, then I think we are all envious of you, and I think your business will continue to grow given the way audits are happening and litigation is happening in this field of GST. And I mean, that is a great place to be. But if we are also focused on generating our revenues from compliance or day-to-day client support or transaction support or revenue audit support or first level assessment support, if that is also our focus area, or we want to develop that as a focus area, then understanding the framework of digital tax administration is very, very important, because everything is getting driven by those principles. So if you are not fully aware of where the government is going, and if you're not fully aware of what are the technologies available for us to meet and prepare our clients, we will not be able to address the market in the right form. Also, I will add that the opportunity is not skewed towards only large companies. The tax technology response that you need to provide to digital tax administration does not require software skills. It does not necessarily require huge investments. It requires having the bent of mind to take advantage of technology in your favor. And I hope that by the end of this presentation, I should be able to at least convey this message that it is something that all of us can do. Many of the things are available free or at very, very low prices, the basic tools that are required. And therefore, it's only up to us of how much we challenge ourselves, how differently we build our teams to be able to maximize this opportunity. So with that introduction, I would start, presenting my screen and share some thoughts on the topic. Can I confirm that it is visible?
It is up. Yeah.
Thank you. So that's the theme. How do we lead the way in the new machine age of tax? How do we become on top? How do we emerge as the leaders? How do we maximize revenue on technology? Now, I would say that if you start thinking technology, you will definitely realize that, and if you are able to develop a good piece of technology, then you must understand that you can sweat that asset as many number of times. The asset does not require any leave. The asset can work 24/7. And the more you use the asset, the more benefit you get. So the marginal cost of running that asset is really very small. And once you've therefore got yourself in the right slot in terms of problem solving, then the asset is able to do far more than what an individual can do. There is no retention problem with regard to that asset, and your ability to scale is very high. The ability to earn a much higher margin is very high, and that's the way you will lead. So you can lead only when you are developing solutions which can be replicated any number of times, which solve a larger set of problems that your clients are facing, which is flexible and agile to be able to encompass more and more development and enhancement, but it ultimately becomes an asset which makes its own money while you sleep, right? So that is the opportunity. If there are software firms, as we are aware, who are in this space, they are PE invested software firms. If you look at their valuation, they're valued more than 1,000 crores. They are doing what traditional CA firms were doing in the past and doing with technology. And they are able to succeed because of the same principles that I mentioned. The biggest challenge they face is that they are not CA firms. They don't have the relationships chartered accountants have, and they don't have the ability to provide end-to-end solutions beyond technology in many cases. So, which is what all chartered accountant firms have. So if you can address the technology piece, because you otherwise mean so much for your client, your ability to do end-to-end and differentiate yourself from many of your standard technology firms and then succeed and make significant gains is very, very high. So these are the quotes that I really like about technology. And if you look at Steve Jobs, it says, let's invent tomorrow instead of worrying about what happened yesterday. So yes, I didn't have any technology since day one. I have not built any software for GST. And therefore, am I 5 years too late? I really don't think so. The pace of change is significant, and you can board the train at any point in time. Yes, you will need to take a run up before you board the train because it has departed the platform, but you will get there if you are determined. And I think we should see what Eric is saying again. Very interesting. So instead of racing against the machine, we need to learn to race with the machine. Any inhibitions that we have in our minds to say that we don't understand software, or that software does their own thing and it's a black box for me, or I can do this better outside, and why do I need software? Why do I need technology? Instead of doing that, if I adopt the software, the technology that we are deploying, possibly we can do much more work than we were doing before. So let's look at what's happening globally. Now, if you rewind back even 5-7 years, or if you look at globally even today in many situations, the entire process of preparing, let's say, a tax calculation and a tax summary was a long process of extraction of a lot of reports, and then somebody sitting and populating those reports in some different files, then trying to summarize all of them in some place, and then after the summarization, some Excel file which will generate the tax calculations or the return calculation. And it used to take maybe a day or even more. But now if you see, transactions are interconnected, systems are interconnected, and the entire process is interconnected in a manner that as the transaction originates, the tax is getting calculated, the liability is getting determined. So while ERPs have extended themselves to be able to do this, clients who don't use standard ERPs or who do not have tax engines have found a way to make sure that they are able to do this real time very effectively. And therefore, in a sense, if you put a stopwatch, maybe it now only takes 5 seconds versus 1 day to really complete the process that used to be 5 years ago a massive process. All of this was possible only because there have been extensive adoption of technology, not by the large ERPs, but by accounting firms and tax service providers who have kind of created plugins to large ERPs to make the process robust end to end. So at a global scale, if you were to look at the map and try and measure how this whole digital tax administration is evolving, some of you will be, I was very surprised when I saw this map. And I think it is really not having a full perspective of the world was something that hit me. If you see, other than Brazil, Spain, and Russia, and Mexico for that matters, who are at the level of e-audit, most of the countries are light blue. Light blue means that they're just e-file. E-file is your ST3 return or your ER1 returns or your income tax returns that you file today, which is just file in a digital XML format. Everything else at the backend is yours. E-accounting is where you are reporting all your transactions only in a digital format. So you know that Saudi Arabia has moved to e-accounting from 1st December 2021. So Saudi Arabia has sort of upgraded this. This is a 2020 updated chart. E-match. So we know the whole GSTR 2A, 2B story that we are all going through. So e-match is where India is, or where China is, where France is. But France and Italy and Peru that you see are only for government transactions, which means if you're doing any transactions with the government authorities, then this process applies. In India, you have it for every single transaction. In China, you have for a select few transactions. E-audit means that the government is performing audits using all this data electronically. So in fact, now while this is 2020, after e-invoice got introduced in India in 2020 and all the experience all of us have in the last 2 years, I think India is easily level 4 now. We are seeing all the audits being done using the big data that we're providing to the government. And e-assess is the next level where right now only Spain sits, where the strategy of the Spain government is that you do not need to file any tax returns. You need to provide me a connection with your system, and I will extract whatever data that I need from the system. So whether India reaches level 5 or not, we are definitely level 4. And then when you zoom out and see, you will realize that there are a huge majority of countries who are significantly behind the curve in India. And on this, interestingly, the whole of Middle East, Poland, France, Japan, Australia, Belgium, UK, Spain, Italy, Portugal are all charting the way to follow what India has done, which is e-invoicing. Each of these countries is planning to introduce e-invoicing in the next 24 to 30 months. And there is a massive transformation that is taking place in those jurisdictions. And most of the model that is being adopted is very, very similar to India, which is real-time reporting, which is sharing accounts payable data, which is expectation of a match, and so on and so forth. And that's what I said in the beginning of the presentation, that I feel very excited for the fact that India is one of the leading countries which has set the tone on how digital tax administration should be run. And it is providing opportunities to a lot of people, just not in India, but beyond. I'm aware of quite a few mid-sized CA firms who have done very well on the digital side in the Middle East, and they continue to grow. And only Saudi Arabia has right now announced e-invoicing or is going live on e-invoicing. But all the other Middle Eastern countries have a path to go live on e-invoicing in the next 15 to 20 months. So again, huge opportunity, a lot of replicable technology, because the ask is similar. While tax laws may be different, the treatment of data is not very different. The logic that you require to match is not very different. The formats of reporting are not very different. So while knowledge for the tax technical and litigation may be difficult to get transposed from one technology or one country to another, but technology is far more transposable, right? And that's the idea, that if you're going to be able to sweat your asset more and more, then it works while you sleep and makes you money. If we look at the India perspective of how India has evolved in the last 5 years, we started with the objective of digitizing tax compliance. As you know, before this, there was no digital tax compliance. It was only digital reporting. There was a need to track the value chain. So the whole GSTR1 and its integration with GSTR2 and GSTR3 was the objective. 2 and 3, of course, never went live. Simplification was another massive objective. And yes, we can debate whether this objective has been achieved or not, whether it's become more simple or far, far more complex. And one can have a view on that. The government believes that it has massively simplified compliances by the transformational changes of GST. And I leave that debate for another day. But if you zoom out and see what you saw on the previous slide, which is what the global direction is, I think post-stabilization, which is now we are in that post-stabilization phase, if you have got it right, then definitely there is simplification. And we'll talk about this part. Tax booster through analytics, I think there's, each one of us individually will have stories around how government has used analytics to try and reach taxpayers and how that has impacted the whole trade, something that we have not seen in the past. What is the framework? This is the first time a special purpose vehicle was set up called GSTN in a private built operate transfer arrangement with Infosys, and a GSP ecosystem was created. Now this is again very, very interesting. We've never had a GST Suvidha provider equivalent structure in India, and this was India's idea of simplifying it for the government. So if, let's say, everybody tries to file tax returns, then from a technology standpoint, when you file your income tax return, the government needs to maintain that many connections. And so let's say if 10 lakh people are trying to file their income tax returns on the due date, then the government technologically needs to be able to keep 10 lakh connections alive. But if they set up the GSP network, and of course, the number of taxpayers in income tax are much more than number of taxpayers in income tax. Also, the frequency of compliance in GST is far more. It's multiplied by 12 or 13 with the annual return, as compared to what is there with income tax. So with 1 crore plus people wanting to file their returns, to maintain 1 crore connections would have been a nightmare, because everybody is reporting transaction data. So the GSP ecosystem then ensures a hub and spoke model where government is maintaining connection with 100 GSPs now, and those 100 GSPs are then connecting to application services providers or directly to taxpayers with their connection. So it has simplified the technology access. It has reduced failure rates, and again, this is the direction in which I have observed many countries go down. So you're seeing more and more countries adopt a GSP equivalent structure when they are going live on their digital tax administration. This is just analytics. This is from the presentation that GSTN has put up on the website gstn.org.in/GST. This is capturing a summarization of 4 years of GST. The 5th year GST summarization should be available in the next 15-20 days. So this data is in that sense 1 year old, but there's no further data available. These presentations come to us only once in a year. If you just look at the data, you will see that a predominant majority are small and mid-sized organizations from a percentage standpoint. 80% are proprietors, 10% are partnerships, and between them they pay 20% of the tax. And then there are large companies, first private sector companies, and then large companies. Just the three subsegments that you look at will add up to a significant 97% of the taxpayers, and 1.26 crore or 1.26 crore taxpayers, which is about 50% of the tax paid. So this market, which is the mid to small market, is a sizable market. There are sufficient number of players, and because they are paying almost 48 to 49% of the tax, they will have significant number of issues, challenges in doing their compliance, and of course all the services around compliance. So this data is very interesting. It gives you a sense of the market for compliance and technology support services. The journey for us, which started in July 2017, got a booster in April 2018 with the e-way bill, then got a second dose in October 2020 with introduction of e-invoicing, and then from there on, I think we've not looked back. 500, 100, now it's come down to 20 crores, and it will keep growing. So the transformation that has happened to government's ability to monitor transactions has been e-invoice. This is one of the most successful e-invoice implementations or tax technology transformation implementations that have happened. There is a huge story behind, it's a global story now, how India has been able to manage implementation of e-invoicing, and how India has succeeded in stopping carousel frauds, in fake invoicing, in real-time monitoring of data, in helping compliance and integrating all the invoice data with e-way bill and e-way bill data with compliance, and so on and so forth. This is the part that I was mentioning, where many countries are now adopting, where countries want to transform and implement e-invoicing equivalent changes in their countries. What have been the drivers of e-invoicing, and what has resulted thereof? First is the menace of fake invoicing. Less said the better. We know what is happening, but you should realize that it is not by chance that a client or a taxpayer is getting reviewed for fake invoicing. It is because government is deploying analytics to identify chain of transactions that need to be tested. And that is the reason why you are seeing far greater success, because now transaction-wise data and technology is with them. All transactions are getting authenticated because government is running 45 different validations on every e-invoice transaction that you send. Once the data is validated, government itself can calculate your tax obligations. The government now with a 2A report can calculate your input credit eligibility obligations. So the government is getting far better visibility on you through e-invoicing. As you know, when you raise an e-invoice, your customer's 2A gets populated immediately, and therefore it's not that you need to wait till the end of the month for the government to know the end to end of a transaction. Compliance is happening at source. You will then find it very difficult to alter or change or aggregate anything at the time of filing the return. Whatever has gone in is final. The process of credit notes is available. The process of cancellation is available. But of course, there will be a trail available for the government to review whether a credit note was appropriate, whether cancellation was appropriate, or whether all invoices which were required to be captured for invoicing have been reported or not, and whether all invoices so reported have been reported in the return and taxes paid or not. Communication of documents. So now that all the information is available real time in machine readable format, and your 2As are getting populated, you would have seen your 2A reports or 2B reports have also become more detailed. So you are able to, on the counterparty side, get information much earlier than what you were getting. In fact, before you receive the physical invoice of the vendor, you will see the transaction in your 2A. And so your ability to map out and understand your supply chain has improved quite massively. And there is an ecosystem development. The ecosystem that is developing is that with all the data exchanges and integrations that are now available, the whole ASP infrastructure, GSP infrastructure, the whole services that are getting provided around accounts payable or e-invoicing or e-way bill are now seamlessly well-oiled machine to make sure that every transaction of the taxpayer gets reported correctly and populates the right aspects of the return. For India was very simple, and this is again the strategy that globally people are following. The decentralized reporting, so you can report your transaction anywhere. You don't have to report it only from a particular government software. The turnover limits that have kept falling, the connectivity with e-way bill, a central dedup or deduplication infrastructure. So if you send the same transaction again, government is able to tell you, and a QR code. Now, I'm not sure whether many of us have now experienced the change in QR code that has happened. First is, of course, every invoice has a QR code, and if you scan it, you are able to populate the entire AP field string. But the second is that if you look at the 500 crore plus companies which are required to do B2C dynamic QR code, once you scan the DQRs, you are actually able to get the pre-populated amount on your UPI apps for making payment to the vendor. So it is no longer a static QR code which you will scan on the UPI at a shopkeeper's place, where then you input the amount that you need to pay. When you use DQR, you are able to get the amount also auto-populated and make a payment directly through UPI. So this integration is again helping more and more digital payments in a faster pace. And you are seeing the growth of UPI. You are reading about it all the time. So the GST compulsion of QR codes is also helping push the whole digital payments agenda that the government has been driving. Now, again, this is quite interesting. When you look at e-invoice thresholds, this is from the same presentation. The invoice threshold is fallen to 20 crores, which means that about 200,000 or 2 lakh people are liable to do compliance right now. So that is a sizable population. So up to when it was up to 50 crores, it was about 70,000 people or 70,000 taxpayers. Now it is 2 lakh taxpayers. The government has announced in 2020 itself that they will bring it down to 5 crores as a limit, which means 5 lakh taxpayers will be covered by the net. Now, this is a very big market. 5 lakh taxpayers or maybe another 3 lakh taxpayers will require all these services in terms of real-time reporting and connection to the digital network of the government very soon. So like we saw on the first slide, we don't have to worry about what happened yesterday. The opportunity is right there. The market is going to grow by more than 300% or close to 300% in the short term. So even if we get into the processes now, we will have the ability to provide services to the larger market that is getting expanded once the limit falls to 5 crores. The other very, very interesting proposition being evaluated, and I personally believe will be very, very transformational, is something called MBMA. MBMA is Mera Bill Mera Adhikar. The government is evaluating whether optional e-invoicing can be made applicable to B2C transactions. As you know, e-invoicing applies only to B2B transactions. But what if it is made applicable to B2C transactions also on an optional basis? The way this will work is that if you today go and buy a cell phone from a standalone shop, not let's say a multi-channel retailer, but a standalone shop, he may give you an invoice and may collect tax from you. And you may not be sure whether he's ultimately going to deposit this tax or pocket the tax. While you have an invoice, you have no assurance of payment of that tax in your favor. And because you are B2C, you will never have the traceability of a 2A or a 2B report. However, if you now, once the MBMA equivalent scheme gets rolled out, if you ask for an e-invoice for your transaction, so what you get is a normal invoice that is generated from his system, or he writes an invoice. But if you ask for an e-invoice from the government platform, which is optional, you may have to give your name, address, PIN code, and certain other details, and wait for another 5 minutes for him to generate the invoice. But then the shopkeeper is required to then ping onto the government e-invoice platform and generate an e-invoice number, generate an e-invoice reference, and then put that e-invoice reference on the invoice and give it to you. Essentially meaning that he has now reported that transaction to the government real time. And he has confirmed to you effectively that he will pay the tax, because once he's reported the transaction, there is very limited space for him not to pay the tax. So you get higher assurance of doing this. Now, one would ask, in today's I don't have time world, why would somebody wait for 5, 10 minutes, 15 minutes for this process to get completed? And what do we get other than the assurance that the tax will be paid? I believe the government is acutely aware of this problem, and therefore it is possible that they may come up with a very innovative option or scheme here to say that e-invoice number that you have now generated becomes like a lottery ticket number for the taxpayer. And at the end of the month, certain prizes will be given based on a lottery system. So therefore, by spending that extra 5 to 10 minutes, maybe you're getting a chance to win a lottery. And to that extent, it may be an incentive for you to push your vendor to report the transaction. So if more and more downward push starts coming on the last mile, and you can imagine the number of shops that we have, which may be standalone, the government's ability to audit those is very, very limited because of the number of people that exist there. But if there is a downward push that comes in, it's not a standalone transaction of 5% of your customers really wanting an e-invoice. It is a technology question of how that shop will do that in the next 2-3 minutes. And what solution are they going to use? Is that shop your client? Are you going to be able to help him set up that system? Are you able to develop a system so that he can use and complete his reporting? Can that system then talk to the returns to make sure that all the transactions so reported are reported in the returns, and so on and so forth? So, like I said, a lot of changes have happened, but a lot of big changes are still coming. And I'm fairly positive this will be announced. It is there on the GSTN website. So they've released a paper on this. And if you go through it, I think you will get a perspective on how it's going to affect the last mile taxpayer. And in that context, how therefore you can help them get ready for this change. So if we have set enough stage of the need for somebody to really understand e-invoicing and start thinking of what services can be provided in e-invoicing, you need to understand the flow that is operating today. The flow is that the taxpayer has to generate an invoice in a JSON file. The JSON is JavaScript object notation. This is a language like XML that we use in income tax. So you generate an invoice in JSON format. You send it to the IRP. Currently, NIC is an IRP. There are 4 new IRPs that will go live in the next 3 to 4 months. The IRP will do certain validations and then generate an e-invoice number, an acknowledgement, a reference number. It will digitally sign the invoice and send a QR code string. And that it needs to be incorporated by the taxpayer system into the invoice itself. The IRP then pushes that data further, and it puts it on the e-invoice database. It generates an e-way bill if e-way bill is required, and it sends the data for GST return preparation. The IRP will also in the future, which is why these lines are in the red, is likely to share the same invoice JSON with the recipient itself through a platform called BNRS. So once BNRS goes live, companies will be able to exchange information of the entire invoice. Today, your 2A gives only 16 or 17 columns, but your invoice may have many, many more columns, so or attributes of data. You are then able to share that entire invoice with the recipient, which means that on the accounts payable side, the entire recording of the invoice can get automated. And you will see this happen. Companies will start using the invoice JSONs that are coming from their vendors to do AP accounting. AP accounting in the way it is being done today of scrolling invoices, scanning invoices, OCR, typing from invoices is going to be dead very soon. Because all this information is coming to you real time and free and without much effort. All the effort that you need is to build a connection into your AP system using that data, or transpose that into Excel and then upload it from Excel into your system. There is absolutely no need for having armies of people first reviewing the invoice, then punching the invoice in the system, then somebody reviewing that punching and then putting it for payment. Authenticated flows can directly go to payment in a digital manner. So there is a huge transformation that you will see in the next 1 year on this quadrant. And so what has the government achieved post e-invoices? One is return enhancement, return automation. Second is income tax integration. You would have heard and read about it, that now data sharing between CBDT and CBIC is very, very regular. And there are several questions or notices being issued on either side based on data analytics. Integration with the India stack. What is the India stack? The India stack is based on Aadhaar. And then your Aadhaar is now linked. So Aadhaar, PAN, both are linked with GST. So you are able to authenticate individuals doing transactions rather than just a PAN number or a GST ID doing transactions. So this is helping a data analytics that is just beyond income tax, because your Aadhaar is connected to many other parts of your ecosystem. And that helps taking care of transactions which are non-PAN based transactions as well, and doing triangulation of information or validation of all the information. Input tax credit, like I said, enhanced data sharing is happening with buyers. Matching has become mandatory in India, and they are able to do recoveries based on transactions which have not matched. And proposal to leverage e-invoice data through peer-to-peer platform, which is the BNRS I spoke about. Now, analytics and how tax evasion is getting curbed through this. One is that they're able to do network visualization, which is who's selling to whom, what is the activity that a particular individual does on a frequent basis, what is the margin that he earns in a transaction, is it all back-to-back in real time? And these are the attributes that get looked at to see whether we need to test this individual for any fake invoicing situation. If you look at carousel frauds are the biggest issue for VAT countries. So in European Union, they lose 15 lakh crores of tax estimated because of carousel frauds. And what is this carousel fraud? It is A selling to B selling to D selling to E, and E exporting. And these transactions are actually only on paper. E sends probably an empty container as an export. Everybody takes input credit, everybody then are able to claim certain export benefits or export refunds, and the government loses money. Funnily, if you read blue papers on carousel fraud, and EU has had VAT from 1970s, they are still not able to curb carousel fraud estimates. But in India, since e-invoicing, the first set of transactions that were scrutinized very closely were transactions where exports were happening and they were expected or suspected to be fake exports. And now domestic transactions are being looked at for fake invoicing. So I think India has grown leaps and bounds in this area in a span of less than 2 years, something that countries have not been able to do over decades. And finally, the MBMA scheme I spoke about. So I'll just take a pause here because this is a completion of section 1. If there are any questions, then we can go to how taxpayers are reacting to this whole environment. There is a question from Vaibhav Shah.
Request members to please post questions in Q&A box. So Divyesh, as of now, there are no questions in Q&A box.
Okay, we will continue. And we'll go now into the second section, which is what is it that taxpayers are doing to deal with this whole situation right now. So from a taxpayer standpoint, all of this brings in a reputation risk, most importantly, the ability to deal with digital tax administration, because, as people jokingly say that GST is the first law where government is ahead of the taxpayer. The actual need for technology, ultimately it requires a technology response. Big data, you need to have visibility of what the government is likely to look at, because only then you can prepare for it. Business model changes. Is your business model aligned to tax provisions? And now with every transaction being reported, do you need to review how you're running your business? And then talent. All of this is not possible unless you have the right people, whether it's through chartered accounting firms, through technology firms, or in-house. All of us need talent. And if you combine digital tax administration technology and big data, you started with systems of record in 2017 as a company, and then systems of engagement of communication on counterparty side with two-way matching and the race to 30th September for making sure your vendors have reported. We're all moving to systems of intelligence, which is where we are trying to respond to the government's questions on big data analytics that the government is doing. But we need to move to systems of autonomy, which means we need to have a system which actually takes care of all these problems and is able to generate any kind of response to any kind of queries that the government generates on the data side. So all your debates should be limited only to technical points, but you need to reach a stage where most of the data management, data responses, tax return compliances are autonomous and are all connected back to your systems and data. And you have to bridge this gap. if you're still here, which is you're only maintaining systems of record, you have a journey to take. If you've not built systems of intelligence, you don't know how to respond. Your record systems or engagement systems on the other counterparty side may not be sufficient for you to deal with the systems of intelligence the government is using. So you need to walk along with the government. Very difficult in this space to say ahead of the government, but definitely along with the government to reach a stage where you are able to deal with change and complexity in a much flexible fashion as compared to what you must be doing today. But how are we doing it right now? So we are generally doing firefighting. Oh, there is an ASMT 10 for July 17 to March 18. Let's find out which Excel file had this data. We can't find it. That person has quit. My computer had crashed. Let us download the return GSTR1 from the GST portal. Let us again make a extract from our accounting system, and let us again prepare as if we are preparing the return right now, a backup. Right, that is how people are dealing with this right now. So firefighting. Second is 1:1 response. One ASMT 10, I will do this whole effort. Another ASMT 10 on the input side, I will do the whole effort again for input. Another ASMT 10 for a different year, I will do it again, or a different state, I will do it again. And I'll keep doing this. So my style is 1:1, which means that I have my routine. I already have enough pressure to deliver my routine. Now the past backlog is also adding up, and that backlog is again being done manually with a hope that what you're doing right now is the same thing that was done 5 years ago, 4 years ago. It's a massive, massive challenge. You can go wrong. And once you go wrong and you respond to the tax office with incorrect data, incorrect backups, you're exposing yourself even more than what you're exposed, or you're giving opportunity for even more aggressive assessments just because you were not ready. And finally, no broad vision. I will keep doing this first two all the time, but I will not create a strategy to say, okay, this is my flow chart. This is exactly how I should deal with an ASMT 10 or a DRC 01, 1A. This is exactly how I should be ready even before I receive an ASMT 10. Yes, I've had a problem for the last 5 years, but I don't want to wait for the fire to start. I want to review and prepare myself so that for the last 5 years, I have some way of addressing any concerns. And for the next 5 years, I will have better technology and solutioning to not let this happen in this manner. Because we are only at the cusp of the beginning of the whole audit review cycle from the government side. It is only going to go up exponentially, maybe several times the number of audits and reviews and questions that you're receiving once the time barring in GST starts coming closer. So current strategy in many companies does not seem to be adept to deal with what is coming in the future. Also, very poor data management. Nobody has created data lakes. Nobody has created centralization. Excel is the biggest friend and foe, because once you import it in Excel, you're not maintaining any traceability of how any data was changed before it was reported, and so on and so forth. And then key person risks. People leave and all the knowledge is in individual's head and not institutional. The solution that he or she developed in a macro, let's say, was known only to him or her, and therefore you're not able to utilize that macro fully, or you are junking that macro and building another macro. You are not creating supporting documentation or linked facts in as you go along, and therefore then you are recreating or hoping to recreate everything when a question arises, and you are not pushing your client systems or your own systems that you're using for accounting to extend and automate and meet the GST requirement. You're continuing to do it outside, which is only going to change or increase the risk that you're facing. And then finally, limited IP reuse, which means you're generating an idea, maybe using some technology, using some Excel to douse a fire, but you're not institutionalizing that to cover many more such transactions so that other fires don't happen. So we are seeing many companies adopt this approach. We will all know, I mean, you will know your clients, and if this is what resonates, then clearly there is a need for them to transform, and clearly there is an opportunity for you to play a role in that. So what is the therefore what is it that are the problems that you can categorize as? There are certain process-based problems, there are system-based problems, people-based problems, and then other problems, and which lead to all these situations. Why do you categorize them? Because the solution to all of them may not be technology. You may have to examine how processes are run in the organization to possibly tell the client of how he needs to change the process or make more people responsible, or get interventions done in supply chain process or in warehouse process or in any of the production processes or dispatch processes to bring in the GST aspects of automation. So what are the process issues? What are the system issues? People issues in terms of not only expecting the tax team to deliver everything, but the entire organization which connects with an invoice or a vendor invoice needs to be sensitized to be able to deal with the GST question. And then what is your brain power, which is running this engine, which is tracking all the law changes, which is understanding what is the consequence of any failure, and which is continuously updating all the process, system, and people controls, is the other angle which clients are focusing on or will need to focus on. So then, what is really the approach? Clearly, some of it is very obvious, which is how do we reuse IP, leverage technology, and reuse data. And now reuse data is very interesting. It's not just a term that is used. I'll give you two examples. The first example is I have seen many clients generate e-invoices directly on a real-time basis when transactions are getting initiated in the system. The invoice gets generated. Now, when you're preparing GSTR1, you're regenerating your sales report at the end of the month. So you're not reusing e-invoice data to generate your GSTR1s. Why can't you do that? And companies are still not doing it. Many companies I have seen. Second example I can give you is income tax withholding. Now, your extraction that you're doing for matching with your returns on the input side, which is your purchase register, that same data can be used for making sure that TDS compliances are accurate. So can you not do one single extraction from your accounts payable system, which will do both matching as well as TDS compliance, so that the reconciliation between TDS position as well as your income tax or your GST credit eligibility position is already there, and you're not generating the data again and again. So income tax team is generating purchase register separately, GST team is generating purchase register separately. There is some error, some gap, and you start creating reconciliation differences, start creating ball drops, start weakening the whole system. So how do you reuse data is very important. So on the three quadrants, we spoke about people, we spoke about process, and we spoke about technology. We are only going to talk about technology now. So technology focuses on single source of truth, which is, like I said, can you do one extraction? Can you create one data repository? And can we keep using the same report again and again to make sure that we are not creating more reconciliation problems? Can we use applications which are focused on tax if the accounting system that is being used by the client is not sufficient to deal with the challenges that GST is posing? Then can we develop more applications, or can we license applications that can be used? Can we relook at how ERPs are catering to GST? I'm sure we've all evolved in our use of accounting software, and many of the accounting software actually are now reasonably up to speed on GST. So are we fully aware of what the capabilities of the accounting system we use? Can we learn or can we train our people in better utilization of the accounting software that we use? And can we then identify what can be done in the ERP itself, which means that your involvement of Excel or any other external processes gets eliminated. Your need for reconciliation gets eliminated. We need to worry about which is the last version of the GSTR1 backup gets eliminated. Your need for worrying about people leaving gets eliminated because you're institutionalizing the process. You're not leaving it to individual memory. Process automation. How can we use robotics? How can we use other automation tools to do steps which are not necessarily something that you can automate? Now, I'll give you a very good example which all of us have experienced, and maybe we didn't realize this whole experience. Let us rewind back 10 years from today or 15 years from today. Let us say if you wanted to change your Hutch or Orange plan as it was at that time, before it became Vodafone. And I'm going back to those days because that's when you will be able to probably relate to the challenge. So if, let's say, I wanted to change my plan, I had the number 111 to call. I would have called that number. The number would have made me wait for X number of minutes, and a person would have responded on the other side of the line. So now I'm using analog communication or voice-based communication to communicate with another person on the other end of the line. I would say that I am on the 399 plan, but I think I want to move to the 299 plan because I'm not using all the benefits of 399. So what does the guy do? The guy then punches my number in a system, and first he gets my profile. Once he gets my profile, he will validate my date of birth or my address or something like that to make sure I'm the right person. So from the customer master, now he's confirmed that yes, he is the right person. After having validated, he has a billing software where all the plans are stored. So he now opens the second software. The second software is the billing software. So he will put my cell number there and then check, am I on the 399 plan? And yes, he finds I'm on the 399 plan. And again, as you would have experienced, every few minutes, he will say, Mr. Divyesh, thank you for your patience of being with us. We are working on your requirement. Now, by now, you have seen that he has done access to 2 different software to only validate I exist, I am the right person, and my plan is correct. Now he has a third software that he opens, which is the master billing plan. Because he's a KPO, BPO person, he doesn't know there is a 299 plan. He doesn't know what it means. He's not expected to know. There's no customization. There's standard plans available. So he goes to the third software to open the plan, and he said that, sir, there is a 299 plan. Yes, I can see it. And sir, these are the changes that will happen between your 299 and 399 plan. And are you confirming that you want this plan? So now the third software tells him that these are the features, and he confirms from me, and I confirm. And then he says, thank you for your confirmation, and again, please be on hold. Now he opens the fourth software, which is the billing software, which takes inputs from my personal data as well as my billing plan and the master billing plan to raise an invoice on me, and raises a service request to say Mr. Divyesh has now raised a service request from 299 to 399 to 299. Now, if you were in that process 15 years ago, after 5 to 10 minutes of this transaction, you would have received a SMS saying that your service has been registered and we will be able to update your plan in 24 to 48 hours or something like that. Now, why do you take 5 minutes to receive that SMS? You take 5 minutes to receive that SMS because after having done this service request in the system, he has to go to the sixth software now, which is the SMS generation software, in which he types the standard message and clicks go, and then the SMS comes to you. Now, the entire experience, which I've narrated possibly in 5 minutes, may actually take 15 minutes to complete. And we were far more patient at that time, and we were able to go with the flow. And then we feel successful when we receive at the end of 20 minutes an SMS and the plan that changes after 48 hours. But what you saw here was not a narration of how poor the processes were in the past. What you saw here was a narration of the only process that was available in the past. Let's now be in 2022 and try to change our plan. If any one of you have tried to do it, you have an app from Vodafone now, which, because my earlier example was Hutch, you have an app from Vodafone. You're able to log into, just open the app on the phone, click the plan you need, and you get a pop-up, and the entire process takes about 15 to 30 seconds at max, where you get a pop-up to say your plan will be changed in the next 2 hours. Okay. So for something that I spent 20 odd minutes in the past, I'm possibly spending 20 seconds today. And what is the change? Do you think that companies have now suddenly bought technology which has replaced all this customer master and billing plan master and billing register and bill plan register and SMS register? And do you think that all companies have invested and changed all their technology? Is that the reason why it's now happening in 20 seconds? Or is it that they have found a way to automate this process? Right? And the answer is the latter. If you put a robotics process which, based on standard instructions, is able to execute standard steps, you can actually do this in less than 5 seconds, the entire 20-minute journey. So what companies as large as telecom, in my example, would have done is used robotics to the hilt to make sure that customer experience changes, although their systems do not or cannot change. The reason for giving this example is to make you understand that it is not necessary that in all situations you need to replace the existing technology. The wins may be actually through process automation using external tools like RPA or robotics process automation, as it is called. And this is doable. This is possible. This is not something which is very expensive. This is not something that only this telecom example can do. Let's take another example. I'm extracting data from the ERP or accounting software of the client, and every time I get this data in the format DDMMYY. Okay, but what GSTN in the API requires is YYYYMMDD. And therefore, I have this intern who has been instructed that before you do this activity, you right-click on that cell, you go to date, you go to properties, you change it to YYYYMMDD. Just validate the date has come okay, and then upload it. Many experiences you might have had of 6th August becoming 8th June, and we have faced those problems while reporting. Okay, or transactions failing. Okay, and therefore you then find a way to put a checker after this intern to make sure that the transaction of your client does not get reported incorrectly. You may get the date in a number format and not in the DDMMYY format at all. And therefore, again, you go back and make those changes. And this is just an example of date. Numbers may come in data format. Sales numbers may come in negative format. And I think there are numerous challenges, and we can go on and on and on. Now there is only so much that you can do to change the source ERP, or you can change the source accounting system. But there is a lot that you can do by using automation to clean up all of this data by just running a simple program that encapsulates everything that you're trying to do through this intern and the checker system. And that gives you 100% guaranteed outcome. You're not hoping that everything that was done was correct. The fifth aspect is analytics. What is the government doing, and can I analyze my data more minutely to think through what questions can come? Am I ready by identifying risks and opportunities in advance? And last is machine learning and artificial intelligence. This probably is the most complex quadrant and the most evolving concept. Let's take an example to understand how. And I'm not giving you a machine learning example, but I'm giving you a high-end analytics example to make a point of how complex it can get, or how useful it can get. So this is again reported data or reported information that you all know that that there is an integration between e-invoice and e-way bill, and therefore once you generate an e-invoice, if you don't have an e-way bill, there is a risk that somebody will come and knock at our doors. Once FASTag got compulsory, you also know that there is a FASTag integration. So which means that actual truck movement also can get tracked through e-invoice, e-way bill, and FASTag. And what is therefore ensuring is that fake invoice menace can be reduced massively. The government has gone one step further on this. Ministry of Road is actually using e-invoice, e-way bill, and FASTag data to determine which roads should be done 4-lane to 6-lane on priority. Okay. So this is the way data is getting used. Now, this is such an interesting case study that it is tax-driven data, but the decision-making ministry, which is Ministry of Road, has nothing to do with tax. But they are using that data to take intelligent decisions. So there is no end to what you can extract when you have all the data in a structured format. And the more you think, the more you apply yourself, the better outcomes you can get through using big data. And then, of course, advanced to machine learning and artificial intelligence. I will not spend time on the people and process, except for one point, that in this slide, as you see, initially everything started with payroll outsourcing, or some statutory report outsourcing, tax compliance outsourcing. But the more recent outsourcing that we are seeing is tax audit management, stat audit management, legal entity rationalization, technology implementation, data management. So the outsourcing is, the curve is only increasing, and more items are getting outsourced. So for anybody who's providing services, it is important for you to be able to cater to this changing need from your clients. And then business partnering strategy, tax planning, obviously will stay within the organization. So the current state of affairs is that you're doing most of the time being spent for transaction processing, controls, and then analysis. And if you get it right, you will reverse the triangle. Transaction processing will be done by technology. Controls will be done by technology. Analytics will be done by technology. And you are then only implementing controls or outcomes of controls and verification, which is the exception or error management, and the outcomes of analytics, which will be planning, strategy, and execution. Yeah. So I've divided all we can get out of technology into 3 buckets. First is efficiency, second is risk and governance, and third is value optimization. So efficiency will mean do more with less, which is the date example that I gave you. Stay ahead or at par with the government. Whatever the government is expecting, are you able to deliver that using technology in the fastest possible manner, and how many processes are you able to automate. Risk and governance, which is how do you manage the risk through a best-in-class framework, so that you are aware of your blind spots, you're aware of your risk areas, you are self-mitigating those risk areas even before somebody questions you, and you've reduced your people dependence. There is institutional knowledge and less dependence on an individual who then contains a huge risk because of loss of that individual from the organization. And then value optimization. Technology will not just solve the compliance problem, but also will give you working capital optimization. So for example, one of the clients had done a very interesting analysis on standard deviation on input tax credit. And what was done was to analyze that based on vendor invoice date, which is now available in your 2A and 2B, the client had mapped that if I had gone by the vendor invoice date, plus let's say 3 or 4 days, which is the general time taken for me to receive the invoice, I would have taken the credit of an invoice dated 3rd June by 7th of June. But I have actually taken the credit on 2nd of July. And therefore, I've lost working capital for 1 month. And he ran that report month on month and then year by year. And we were able to identify which are the parts of the organization that are delaying the process of cash optimization. And we were then able to correct those processes and advance those credits. And the client got a working capital advantage. Same is the case with your 2-2A matching. That today you may be doing matching and there is a race to the finish in September of next year. But can you do this matching on a real-time basis? Can you make sure that you are paying the vendors only when matching happens? And can you enhance your technology in that manner so that you are more real-time rather than post-facto? And then tax cost optimization. So expense that is getting booked to your P&L, is it the right expense? Are you correctly disallowing 17.5? Is your 42-43 calculation accurate? Why are you doing it in Excel and why can't you automate any of those? Is your 18.6 calculation accurate and can that be automated? Is your 180-day reversal accurate and are you reversing immediately or not? Or are you waiting for somebody to point out that issue? Are you immediately taking vendor credit notes and reversing once it comes into 2A? So all the 9 yards around using the data that is available in the quickest possible manner and thinking of what creates value, thinking of what creates a benefit, either a P&L benefit or a working capital benefit, will fall in the value optimization bucket. So efficiency, which is speed, quality, and sweating the asset to do a lot more than a human being can do with higher consistency. Risk of making sure that there are no ball drops and surprises later, or there is less people dependence. And value, which is where you're able to generate savings for the client or for the organization. So these are the 3 quadrants. I'm not spending time on each of the quadrants because there's a lot we can keep talking about it. But if you understood the concept, then what you will be able to offer to a client as a proposition is benefits in each of the 3 buckets. And once you are able to start offering benefits, then your ability to make this as an additional service offering, make this as a differentiated service offering, make this as something that you can set up a separate team to deal with, and make this something as a differentially paid service for a much larger set of clients or new bunch of clients is certainly a big opportunity. And the more you do, the more time you spend on this, the better you will get it. So whether it is complete tax transformation for the tax function of the organization, or it is point solutions, which is doing automation for certain problems that the client is facing, or it is managed tax service, which means Now I'm far more confident of taking over all the compliance obligations of direct, indirect tax of the client because I have technology to do it. It doesn't matter how large my organization is because technology will solve that problem. And I'm able to show to the client how technology will deliver, how I can deliver better analytical and intelligent reports to the client using that technology is what is the opportunity scale for all of us. I will just, close or summarize rather some of the technologies that you can use. Like I said, ERPs are capable. So whichever accounting software you're using, have you understood all the possibilities that it offers? There is robotics that is available. There is UiPath, which is another simple way of writing an if then else executable flowchart program. IQ bots. This is again very interesting. If you look at certain situations, for example, any input tax credits coming through reimbursements, the employee travels, the employee is taking a reimbursement of the cost that is incurred, and there is an embedded GST in that. Your accounting system may capture it as a reimbursement of 1,18,000 rupees, but does not possibly capture a 1 lakh plus 18,000. You can use technologies like IQ bots to split, to read the document, which is the reimbursement underlying invoice, to find out what is the HSN, to find out the eligibility, to break up all the entry into like a 2A or a 2B type of an entry, to split the 1,18,000, and to enable you to create a backup so that you can do the matching and taking the credit. So IQ bots are also used where there is unstructured data, and there is a lot of machine learning based activity that needs to be done. And it's not a simple RPA process that will work. Python is a more advanced coding language that again is not very complex. If you spend some time, you will be able to learn yourself, or you will be able to hire talent which knows Python and solve many of your problems that you're facing right now. Flash is another tool which enables data transformation. And then there are various off-the-shelf cloud-based or on-premise solutions. So you don't need to boil the ocean. You don't need to prepare a solution that prepares GSTR1 and does everything that is needed, connects with GSP or connects with GSTN. That may require a massive investment. But the play is that how can I get the most efficient and most reliable software, which does the government end of the compliance correctly? And then how can I bridge the gap between the client and that software, which can be fully automated? So then when I add the two, I'm able to go back to clients to say that do not worry, whatever system reports are generated from your system, in whichever format they come, I will automate their connection with the return that you are preparing on an end-to-end basis. This is what I say as the record to report to return, and the return to report to record reconciliation, which is that if I pick up a return and I see in table 5 a transaction of GSTR1, I'm able to trace it back to the report it came from. And I'm able to trace back the report to the transaction ID in the accounting system. So, or if I start from the accounting ID or a GL code, I can know that this particular transaction is sitting in which return. Okay. And that is what you need to achieve. If I can achieve this, I can achieve end-to-end integration. Then whether India is at level 3 or level 4 or level 5 or level 100, whether government uses standard analytics or AI or machine learning, you are ready for it because you know that you can prove every transaction that you did, and you're confident that every transaction that you did has been reported, right? So you don't need to build all the solutions. You need to be aware, and you need to think through what you want to use to your advantage. There are, if you again look at this software that the government has made available, if you're a taxpayer less than 1.5 crore turnover, there are a lot of software that are available free from the government itself. There are all these accounting software which are enabled for GST and GST e-invoicing. So again, if you're using any of these software, it becomes that much easier for you to integrate. And like I said, you don't need to build the software yourself. You need to focus on end-to-end automation. So is the future already here? And I would end by giving you a smartphone analogy that what I would think as a tax technology professional, and we are coining this term called taxologists, tax technologists, and tax comes first because in my experience, unless you are a tax professional, you will not be able to deliver this well, because software companies will come and do only the little bit that they can do, but they will not be able to provide end-to-end. They will not be able to understand the risks of anything going wrong. They will not be able to handle audits, assessments, investigations. They will not be able to do advisory services. So to my mind, taxologist is the way to go. And I aspire to become one. But a simple way to understand what you need to aim for is looking at your own phones, right? Once you bought the phone, there are two parts to everything that you do with that phone. One is the operating system and second is the applications. You can download any number of applications that you want, and each application will do what it is intended to do on that platform. And why is that so? The reason is that each of those applications are deeply integrated with the platform. But where did it all start? It started with the platform. So can I build a tax platform? Can I, as a firm or as a group of firms, a group of chartered accountants, can I build a tax platform where I have a strategy in place, okay? And that strategy then, with any number of apps that I keep adding to that strategy, whether it's on compliance, it's on data reporting, it's on tax accounting, it's on analytics, I will have to just build another app or build another connection. And the client will be compelled to work with me because he's taken the platform, right? You cannot download an iOS software on a Play Store on an Android. And that is because you've chosen Android or vice versa. So can I reach that stage where I am always thinking, where will I reach the platform, and am I reaching the platform? And then I have built many solutions which are integrated with the platform, which can talk to each other, which are seamless, which can reuse data, and which are very easy to use. If I get there, then possibly, I've created something that will work for me, and I don't have to work for as many hours as I do right now. So I mean, with that, I'd like to end my part of the conversation. Happy to take questions.
Divyesh, we have one question from a member. This is regarding a small and medium-sized client. Though they transfer and adapted new technologies by investing money, but on the other side, at ground level, government mindset has not transferred. So to get GST refunds, it is a Hercules task. Nowadays, no intellect has been used, only compliance and nothing else.
Yeah, so my understanding is that the government is acutely aware of this. And there is a lot of work that is happening on refund side automation. You've also seen recently a circular last week on post-audit for GST refunds. So there is active thinking at the government side to say that only when they run campaigns do refunds come quickly, otherwise refunds are taking much longer. So is there a way in which we can implement online filing of refunds on an end-to-end basis, and online review and processing of refunds as well, to eliminate the processes that the taxpayer has to go through, and then only a post-audit will validate or review what was done. So you're right, some of these aspects are still offline, but I can assure you the government is working on it, is what I understand. So it will get smoothened. But before that happens, I think if you can think through all the questions that come to you in a refund claim and prepare those reports in advance, prepare the matching reports in advance, prepare all the kind of queries that they can raise, for example, EBRC's reconciliation with sales invoices. Can you download it from the banker's website in advance and identify common strings and do the matching and keep the matching report ready? The more you are able to do that, the lesser and lesser space you will provide for either a pre-audit or a post-audit in refunds. But yes, I would agree that still some of the processes around refunds are not as evolved as they should be.
Now I think there is no more questions. So now everybody is depend one more question.
5 years down the line, tax professional with talk language of APIs and softwares, and not on the sections of law.
That's an interesting observation. So I certainly wish that happens. That our problems become problems of technology and less problems of law. Because once you're reaching that space, you are actually reaching a space where a lot of the processes are standardized, and you're worried about some parts of your technology not working, and you're asking a friend what is the best way to fix it, instead of worrying about interpretation of provisions. Of course, like I said in the beginning, interpretation will continue to be a topic. We will have interesting judgments that have come, like those which have come in the last 2 weeks from Supreme Court. So interesting judgments that will keep coming, and the legal fraternity, I'm sure, will be very, very busy. But yes, I feel that the more chartered accountants will adopt technology, the sharper their services, the wider their basket of services to customers will become. I think that is the way to look at it. That if I want to start a new field of service for clients, there is definitely an opportunity out there. It is hard, it is complex, it is not something that we do naturally, and we may make many mistakes before we get it right. But I personally believe that it's an area that one should try out, because if you get it right, then there are several better, wider services and a bigger market that you can cater as compared to what you're catering right now.
Yeah, well said, sir. Now it's a very nice presentation, and I think there is no more questions. So I think everybody has understood the concept of this tax technology, new developments, which is now going around with all the professionals and all the industries, specifically in GST and now also in income tax also. The way this departments and government is going, this will help us to expand our practice area also, and to look after our client requirements. Thank you very much, sir. Before I say Shreyans to propose hearty vote of thanks, there is one announcement. On 19th, that is tomorrow, we are having physical meeting on auditors reporting requirements and interplay between CARO and Schedule 3 and modification to the auditors report. We are having eminent faculties, our CCM Sri Divyesh Kabraji and one CA Pankaj Tiwari from CNK. Also tomorrow we are felicitating our convener and deputy convener of last year. And another one announcement, we are having with us tomorrow, going to our CA Dayanivas Sharmaji, the chairman of Board of Studies ICAI, to give brief on proposed new scheme of CA course. So I request everybody to present physically in large and to attend the seminar. And one more announcement, tomorrow also we are having AGM of our study cycle. So now with this announcement, now I request Shreyans to propose hearty vote on thanks to all the speakers.
Dipen, would you like to give what?
Yes, Raj. Thank you, Jawarsa. Members, you all will agree that technology has been one of the key factors in our practice, which has been evolving day by day, and so do us are evolving day by day to cope up with the technology. Thank you, Divyesh bhai, for sparing your valuable time and such a detailed presentation. You have taken us through the journey of GST from start till date. You have also shared how can one be proactive rather than reactive, so that gaps can be minimized and there can be a free flow of data from both the sides. You also shared how chartered accountant can enable a business to cope up with the recent development in technology and what can be the future of chartered accountant in the same. Thank you, Divyesh bhai, for the same. I will request everyone to greet him with a round of applause. Thank you.
Thank you very much. Thank
you.
you for having me.
Thank you, sir.